Welcome to this explainer. The market is shifting incredibly fast right now, and the noise around artificial intelligence is literally louder than ever. So today, we are turning AI confusion into AI confidence. We're going to decode AMD's Q1 2026 earnings step by step. Our main goal here? To uncover the modern investor essence. Let's separate the hype from the cold hard data.
Okay, let's take a quick look at our investment blueprint. We'll start with Section 1, the AI growth engine. Then Section 2, hard numbers and profit margins. Section 3, important financial ratios explained. Section 4, strategic investments and backlog. Section 5, the software first pivot. And finally, Section 6, the modern investor essence.
All right, Section 1, the AI growth engine. To really grasp AMD's momentum, we have to look at the structural demand that's actually driving the business forward.
So, is AMD the ultimate AI play for 2026? Look, this is the exact question every single market watcher is asking right now. With hyperscalers demanding an unbelievable amount of compute power, we have to figure out if AMD is perfectly positioned to capture this massive moment. Let's let the data do the talking.
What's truly fascinating is this staggering 57% year-over-year growth in the data center segment alone. That is $5.8 billion. It's not just a side division anymore. This is absolutely their primary growth engine, and it's being fueled almost entirely by cloud providers desperate to deploy advanced computing infrastructure.
And when we consider the broader top-line impact, it's just as impressive. We're looking at a 38% jump to a record $10.3 billion in total revenue. While growth was solid across all their segments, it's really the aggressive rollout of these AI accelerators that's lifting the entire company's valuation.
Moving right along to Section 2, hard numbers and profit margins. Let's see exactly how all that top-line growth translates to the bottom line. Okay, the absolutely crucial point here is the profitability expansion. Notice the 55% non-GAAP gross margin. As their client mix improves and server CPU growth really scales up, they're optimizing their operating leverage. Simply put, they are making a lot more profit on every single piece of silicon they sell. And that is driving non-GAAP net income to a massive $2.3 billion.
$2.6 billion. That is a record for their quarterly free cash flow. Think about that for a second. That's essentially 25% of their revenue turning straight into pure liquid cash. And they aren't just sitting on it, they're already deploying it for a massive $6 billion share repurchase.
Next up, Section 3, important financial ratios explained. How do we actually price all this growth? Let's break down these complex metrics.
First up, the forward PE ratio, sitting at 45.55. Now, to a traditional value investor, that might seem really high, right? But remember the context of the sector we're in. AI stocks trade on aggressive forward growth expectations, not just what they did yesterday. When you buy in, you are essentially paying for that future acceleration curve.
And honestly, that is exactly why we look at the PE ratio. With the PE ratio sitting right near 1.0, it tells us that despite the seemingly high PE, the share price is actually remarkably aligned with their rapid growth rate. The market is pricing in their future execution quite effectively. On top of that, their balance sheet is literally a fortress. Look at this incredibly lean debt-to-equity ratio of 0.05. That means AMD is funding its massive expansion with virtually zero reliance on debt. Add in a current ratio of 2.72, and it proves they have more than enough short-term liquidity to maneuver. All right, let's look at Section 4, strategic investments and backlog. They clearly have the capital, so how exactly are they deploying it to create future catalysts? Well, recent SEC filings outlined that AMD acquired ZT Systems for $4.4 billion, right alongside Silo AI. And here's the brilliant part. While they divested the manufacturing arm, they kept the vital design talent. They are literally buying the expertise to build end-to-end AI infrastructure directly for the major cloud players.
And those strategic investments, they are already converting into massive orders. We're talking 6 gigawatt deals from both Meta and OpenAI. To put that into perspective, that's enough power capacity to run a small city. This gives them extraordinary backlog visibility for their upcoming custom MI450 chips in the second half of the year. This demand isn't speculative, guys. It's locked into rock-solid partnerships.
Let's pivot to Section 5, the software first pivot. To keep things objective, we absolutely have to talk about the structural risks they face and how they're responding. Historically, we know AMD lagged in software.
They were a heavily hardware-centric company. But they've completely flipped the script with a new software-first doctrine. By focusing on expanding the open-source ROCm ecosystem, they are aiming directly at their biggest competitor's moat. They know that to win the AI war, they absolutely have to win over the developer community.
However, let's not sugarcoat it. They still face a significant R&D spending gap. At $1.58 billion, their spend is basically half of their primary competitors' $3.09 billion. Combine that with rising memory cost headwinds hitting their client and gaming segments later this year, and it's crystal clear they are going to need flawless execution to hold their ground.
Finally, Section 6, the modern investor essence. Let's bring this all together to find our core actionable takeaway.
It really all starts with the sheer scale of the opportunity. CEO Lisa Su recently doubled the total addressable market forecast to a staggering $120 billion by 2030. That clearly frames the incredible long-term runway ahead. This major shift toward agentic AI, AI that actually takes actions on its own, means we're looking at constant, structural demand for compute power.
And this brings us to the philosophy we always follow. Invest when the time is right. Courage over fear. This perfectly embodies the modern investor essence. It's about looking past the short-term volatility, ignoring the daily noise, and recognizing undeniable structural momentum that's backed up by a rock-solid balance sheet.
So, the final question is really yours to answer. Knowing what you know now, record free cash flow, strategic AI acquisitions, and massive multi-gigawatt hyperscaler partnerships, does AMD deserve a place in your portfolio? Take these numbers, apply them to your own strategy, and step into the market with absolute confidence. Thanks so much for joining me on this explainer.